I'm Mike Stanton. It's January 29th. This is the BAM Weekly Muni Market Update. I'm here with Grant Dewey and David Yoon from BAM's Capital Markets Desk. Gentlemen, thank you for being here. Grant, let's talk to you about the markets first. There was a lot of activity in the financial markets, not so much in the muni market this week. We'll talk about GameStop in a minute, but why don't you start by telling us what happened on fixed income?
Well, we've had, we've had a pretty impressive run also, Mike. I mean, it continues to be a great time to issue bonds in our markets. You have AAA muni rates out to 30 years at around a 140. So, certainly driven partially by strong investor flows. We've had $8 billion already year to date, another $2.8 billion reported this week, which is the second biggest on record. So, and it's significant just from an historical standpoint. We've got, both absolute rates and muni ratios are at all-time lows, and credit spreads also, A and AA rated credit spreads have returned to the tights that we saw back in January. So, pre-pandemic, obviously. And I think attention has turned a little bit in our market as you would expect with the election. Democrats are taking aim at a few of the changes in the 2017 Tax Act. I think there's more momentum brewing for higher corporate tax rates, which would be, a moderate positive for munis. I saw today that things are heating up a little bit on the political football of repealing the SALT deduction, red state interest versus blue state interest there. But the story is just the market continues to see tremendous demand. We had, Dave will get into this, but we had 8.7 billion or so in supply this week. Just every deal, I think almost without exception, was oversubscribed, got bombed. You even, it would have been unthinkable 6 months ago, but Chicago Board of Ed came to market, which is below investment grade, and they ended up pricing at with tremendous demand. I think they ended up at about 100 spread off the AAA MMD. So that's the story. It's a tight market. Next week we've got a couple kind of highly rated New York deals leading the way, TFA and Nassau County IFA, but I'll let David get into more of all that.
So before we get into the new issue market, let me just ask the question. We've talked the last couple of weeks about the January effect, which is a well-known situation in munis where demand often outpaces supply at the beginning of the year. This is the last week in January. How quickly do we think that supply-demand may rebalance? You mentioned tax policy, and some of those things are going to take a while to become effect, but one thing that's coming soon is tax bills. And historically, investors at the retail level will withdraw and liquidate some of their muni holdings to pay tax bills that are due between now and April. Just what's your sense of how much further we have to go?
I think it's not as related to the January effect as it is just to kind of the, Powell and the Fed has just, made it very clear that policy is going to remain very accommodative, that if you had, something like the taper tantrum that we experienced after 4 or 5 years of QE after the after the financial crisis. I just think that there's a lot of confidence that the rates are going to stay low, that inflation's not an issue, and so in that environment, fixed income becomes very attractive, and munis are still relatively an attractive, safe asset class for investors. So. Our supply in January wasn't anything to write home about, but I don't remember seeing this much investor demand during January either. So I don't know if that answers your question well. I just think that this is a liquidity-driven, Fed-driven market, and until that changes, Powell indicated it would be mid-22 before they would even start thinking about tapering back.
I think that's a great answer, and it's so it's not just the January effect. We have to get used to this for a while. David, let's talk about how that translated to new issue pricing. What did you see on the BAM insured front this week?
Yeah, so as we wrapped up the month of January, which is, as Graham pointed out, historically kind of quiet time in the muni world, We saw this week's muni supply relatively flat week over week with issuance shy of $9 billion. Most of the supply was concentrated in 20 deals with at least $100 million of par. With respect to BAM, we insured almost 30 new issues, totaling $268 million of par. Some highlights are the $78 million Fort Bend County MUD number 58 Texas transaction that was priced by Hilltop, $22 million North Glen, Colorado wastewater bonds by RBC, which qualified and carries our BAM Green Star, and lastly, the $18 million Westminster School COPs by Raymond James. And just to go back with what Grant was saying earlier, but the feedback from all the underwriters on those deals was that the deals were well oversubscribed and did see solid yield bumps.
And looking ahead to next week, what's coming up? What stands out?
Yeah, so for next week, we're actually going to see, as of now, we're going to see a little bit less supply, about $7.7 billion. More of the same with respect to the concentration in large deals. So about 2/3 of the supply will are at least $100 million of par or greater. So in terms of things that are in BAM's world, we're looking at about $280 million of BAM insured par. That includes RBC's $76 million University of New Mexico transaction and Piper's $38 million Vallejo Water Bonds California transaction, and that one actually qualifies for BAM's Green Star as well.
Great. I know there are a couple other transactions where we're waiting to see just how much insurance is going to be used. One trend, Grant, maybe you could weigh in here. One trend we are seeing is that some of the investor tendencies that were established last year about looking for insurance at higher levels, looking for insurance on higher rated underlying deals, we're still seeing that, right? I mean, those trends are continuing. That does seem like that was a long-term shift, even as supply and demand shifts here.
I agree, Mike. I mean, we had substantially higher penetration rates last year. A lot of that was driven by kind of an expanding target market that included a lot more, AA category names than we had ever insured in, either the primary or the secondary. So I think there was a tectonic shift of sorts to bond insurance, and we're continuing to see good demand, even down at rates that that are at historic lows. So I do think that there still is credit differentiation going on in the market, but we'll see. So I think we'll continue to see that.
Before we sign off, I just want to ask, do either of you have any reflections on the biggest story of the week, the GameStop run-up? David, you're our designated millennial representative on this panel. Any insights on what this might mean for munis?
I don't think we'll be seeing the type of inflows that GameStop has been seeing, but if we did, that's just more demand for the muni market. So yeah.
I would be lying if I didn't say, as a communications person, I took a look to see if there was any chatter of munis on the Reddit message boards, and it's very, very limited so far. But maybe we'll change that going forward. I do think it's worth noting that this does not appear to be any kind of systemic issue, right? I mean, what's happening in GameStop didn't really spill over into the fixed income market, so that's worthy of note as particularly regulators think about how to respond.
But aren't all these newly minted millionaires going to move to Puerto Rico, Mike? That could.
There was some chatter about that online. We'll see if they follow through. Guys, thank you for joining us for this time. This was a great discussion, and we'll see you next week.
Thanks, Mike.
Thanks, Mike.